Are you like most sales and other professionals who want to grow their wealth faster than what they are currently doing through their company 401k, even with that company match, the stock market, or just plain saving money? Would you sleep better at night if you had the financial freedom to be job optional in just 3 to 5 years through investing in real assets? Maybe you don't want to stop working, but wouldn't it be cool if you could retire a decade earlier than most? And do the traveling you and your family have planned for years while you're still young and can enjoy it? Let's face it, most busy professionals don't have the time or desire to take on more work outside of their W-2 to grow their wealth. On The Wealth Flow, each week we share the stories, the investments, and take a deep dive into the various asset classes that can deliver that accelerated growth to your portfolio passively. That's right, no extra work for you. Instead, we'll put your money to work. Learn what the 95% aren't talking about and join the top 5% of earners today on The Wealth Flow.
All right, welcome to The Wealth Flow. My guest today is Justin Goodin. Justin came from working at a bank in finance to being a real estate developer. So I can't wait to dive into his story. Justin, welcome to The Wealth Flow.
Yeah, thanks for having me on, Keith.
Yeah, told you that was going to be a short introduction. So let's find out a little bit more about you here. I like to typically start, Justin, with really your background, where you grew up and what eventually led you to the profession of real estate.
Really happy to chat. And like you mentioned, today I'm a ground up multifamily developer based here in Indianapolis, Indiana. We're building Class A mixed use projects from the ground up all throughout different cities in Indiana. But it didn't start like that. I started growing up and was looking for different ways to generate passive income, like a lot of people. And also, like most people, when I wanted to get started in real estate, the first thing that I thought of was like, oh yeah, I'll go buy a fix and flip or a single family house and rent it out to a tenant, which is exactly what I did and all I knew at the time. So my first ever investment into real estate was buying a $44,000 house on the west side of Indianapolis, if you can believe houses were that cheap back then. But that's what I did, bought a rental and started renting out to a tenant. And, on one of these houses that I purchased, it was also from another investor, a local guy who was also in college and younger guy, kind of just, normal, average looking. And I asked him on the porch of this house that he was selling to me, why was he selling this house? Not knowing like really anything else to ask him at the time. And he mentioned something like really interesting to me that sort of like just changed the trajectory of like how I thought about real estate. He was liquidating all of his properties, all of his single family properties to go and invest in apartments, which at the time was like, mind blowing to me. Like, how is this average, like normal looking guy going to go invest in apartments, which I thought were like for millionaires? So that sort of like changed like my whole path in real estate. I stopped like investing in rentals and fix and flips after that and sort of like went down that path of like self-education and like learning more about apartment investing. So long story short, I graduated from a local business school here in Indianapolis with a finance degree. After graduation, I started working for a bank as a multifamily underwriter. All went, with a like really, fantastic experience for what I do today, working for a bank, kind of seeing how they underwrite deals, how they evaluate sponsors, all of that was like really helpful for what I do now today. And, after spending, several years working for the bank, I left my W-2 job to pursue real estate full time and have partnered on around like 500 multifamily units. And I've done seller financing, joint ventures, syndication, bought smaller properties with my own cash, and eventually moved into ground up multifamily development.
Okay, no, that's fantastic. Yeah, that's an interesting, that so soon in your kind of investing career, you already heard a little bit about investing in multifamily with this guy who's selling you a property and saying, "Hey, I'm putting everything into that." But I want to go maybe back a little bit to working for the bank. So, did you start in the underwriting department of multifamily, or did you kind of work your way into that, or how did that come about?
Yeah, started fresh out of college into multifamily underwriting. So this was for
Wow.
a bridge lender in Indiana. We were focused on, and if anybody doesn't know, I mean, a bridge lender is basically like a hard money loan for a commercial multifamily property. So yeah, I jumped right into it. Had no real estate experience or like really not a whole lot of knowledge about underwriting. But for the bridge lender, I was responsible for really like analyzing the risk for the bank, making sure that the sponsor could, execute their business plan and what we call like take out or pay back the bridge lender their principal back. So they renovate the property, refinance or sell the property, and the bridge lender is meant for, short term financing to get like in and out.
Okay. Okay. Typically on a bridge lender, how long are those loans usually designed for? I know obviously it can vary depending on how long it takes to convert it and turn the property around and do the refinance or the sale. But what is the typical hold period for those?
Yeah, the on the bridge loans, the terms are most commonly what we call 3+1+1. So it's a 3-year term with two 1-year extensions. That is like the most common kind of bridge loan structure out there that I've seen.
Okay. Okay. Yeah, fantastic. Yeah, obviously foundation for where you ended up. Um, so you did the initial single family rental that you bought for 44K. Kind of had a little bit of a tease as to the multifamily on the horizon, what this guy was doing with his, and here you're working day to day, doing the underwriting. What type of an investment did you do after that initial single family rental that eventually led you to the multifamily investing?
So I did a handful of fix and flips and had some rentals and things like that. Eventually, sold off those properties and moved into commercial multifamily. And my first kind of larger scale commercial multifamily asset was a 29 unit on the west side of Indianapolis that we syndicated, raised capital from investors, and that was like my first taste into commercial real estate.
Okay. And you already had kind of a background on how that works as far as, the bank and that, but who did you have partners or anything on the 29 unit? And I guess tell us a little bit about what kind of experience that required to undertake that 29 unit, and I guess what kind of a raise was it as well?
About the project just in general, I mean, it was like your classic, value add opportunity. Found this property from a direct mail campaign, meaning that I sent like actual pieces of mail out to property owners. This guy or this property owner happened to give me a call, and I toured the property shortly after that call. But yeah, I mean, 29 units on West Side Indianapolis, very just outdated units, mismanaged property, low rented units, and like all your like classic kind of value add components. The owner actually lived on site in one of the units, which was really interesting. And the parking lot was gravel, if you can believe that. So like all these things that kind of just screamed that there was huge upside potential. So I went to another friend of mine and local investor and presented him this deal. Like it'd be like an awesome partnership and deal to buy. So me and one other general partner raised around like $550,000 from limited partners, purchased it with fixed rate financing, and was able to purchase it, and we still have it in our portfolio today.
Oh wow, okay, nice. And so from that one, that kind of got you into the world of syndication. Did you continue to do syndications after that?
Yeah, I mean that was a great kind of proof of concept. I saw like the benefits of multifamily. I saw like how you could force the appreciation on the asset. I saw that these larger scale properties can afford to hire a property management company to oversee like the day to day activities. So like we're like what we call asset managing the property from a high level. Like we're managing the property management company, but I'm not like on site giving tours or fixing light bulbs and things like that. Me and my other partner are really kind of just managing the asset from a high level and making sure that we're hitting our, KPIs and the property staying on track to perform well for our investors. But yeah, that kind of like opened my eyes to, the awesome benefits of multifamily. And yeah, have since gone on to, you know, do co-general partnerships on other larger scale deals, smaller deals, And I think we have like around like 500 multifamily units today.
Okay. All right. And then tell me a little bit about how we moved from that to obviously now you're in development from the ground up. Tell us a little bit about that and, kind of what also maybe are some of the differences from taking an existing asset to, just completely going from the ground up and building one.
Yeah, I mean, development is just a whole different ball game, different strategy, different ball game. And one of my main reasons for pivoting from value add opportunities to ground up multifamily development is I just think there's actually less competition in the development space. I mean, of course, there's a tremendous amount of competition in the space where developers are building 200, 300 unit properties. But for me, I'm like really focused on starting out between 50 to 150 unit size properties, and I think there's actually less competition in that space. I mean, just like as an example, being here in Indiana, I know like maybe like only a handful of developers that are doing properties in that size range. Additionally, like I just think development takes so much more upfront work that less investors are willing to put in that work for that upside later on with that project. So for me, I mean, the value add space I think is, dare I say, inflated. There's just so many investors looking for like the same kind of value add properties, and I went like an entire year without buying a deal because I couldn't find it like anything to pencil out. Deals that were off market, on market, stuff from brokers. I just couldn't find anything to like pencil out and give me these, risk adjusted returns. Even like when I did find, an opportunity, I'm competing against like 20 other buyers that are also submitting an offer on that awesome deal. So for me, making that pivot to development, I think will in return allow our company to do more volume, more deals, simply because there's less competition. And there's some other reasons in that reason as well, but definitely competition was the main driver behind that.
Okay. And tell me a little bit about kind of your choice for the size, 50 to 150 unit. Is that just because some of the larger players are up above the 150 unit, or what attracts you to that kind of space?
I mean, really, like I mentioned, I mean, I just think there's less competition in the sort of space or size range, so allows us to do more deals, more volume, and like I'm just not. I don't have like any kind of unit count goals. I'm not like these
Okay.
other companies sometimes that have like a $10,000 or 10,000 unit goal range. Like I want to do awesome deals that are 50 units, 80 units, 120 units. Like
Yeah.
I think if it makes, financial sense, then, I'm all for doing, great deals like that. So, I mean, more just, quality over quantity.
Yeah, makes sense. And so tell us about so have you broken ground or started your first one yet?
Oh yeah. Yeah. We have our first one that's about 65% complete as of, yeah, like we're in November
Okay.
2024 right now. So that was our first one that we started in February of 2024. It's going to be a 14-month construction timeline on that one. And we'll be, starting leased up in March of 2025. We actually just publicly announced our second one, which is also going to be another Indiana market, but that'll be 114 units, 3,000 square feet of commercial space, and hoping to break ground on that one by February of 2025.
Okay, perfect. And let's talk a little bit about this one that you started in February of 2024. How many units is that one? Give us kind of an idea of what that project looks like, and some of the different hurdles and things that you've had to overcome with it.
Yeah, so that one that we started is 84 residential units. There's about 15,000 square feet of office and four small commercial suites. And those commercial suites are really like tailored towards local or small businesses, insurance, realtor, flower shop, things like that. Not sort of like the subway or major chains, like more just like suites for like these local or small businesses. So Class A, mixed use, um, located in a city about 10 minutes away from Indianapolis. And I think the major hurdle on that one, at least like for us in our business plan, is getting these projects to like pencil out, like getting these returns to be sufficient for our risk. Um, Really, like right now, um, it's basically impossible to get construction deals to pencil out unless you want to partner with the city or town in some way. And what I mean by that, like there's like different incentives that developers can use and partner with these cities and towns to, make these projects more market feasible. So again, like goes back to the competition that I mentioned, but there's definitely
Hmm.
less people that are willing to do this upfront work or even have the knowledge to do so in the development space, which again, I just think is more of our competitive advantage. So yeah, a major hurdle in these development deals in that one is just getting these deals to pencil out and finding a good, common ground with the city to partner with them.
Okay. And talk a little bit about that. And what kind of incentive program did the city have on this particular one? And how does one go about finding out that that's even an opportunity within the city?
Yeah, there's many different kinds of incentives out there. On this particular deal, we did something called tax increment financing, where I mean, basically, like the city issues a bond, we sell the bond, and collect proceeds, which are able to go into the project as like real money, which inherently like lowers our cost basis on the deal because the city is willing to invest that money into the project. It's not paid back. We agree to a tax payment on the project, and in return, that minimum tax payment we agree to pays back that bond over time. So yeah, there's various incentive programs out there that developers and investors use. In particular, we use that tax increment financing structure, and I would say there's the investors that want to use incentives or partner with cities. You just need to show why they should partner with you. Like, why should they partner with you as the developer or investor? So in our case, like we presented them with very compelling project to where they would want this into their community. It's not just a boring apartment complex. It's providing, very luxury, high quality housing. It has, office space in there, commercial spaces in there. So it's creating jobs. It's bringing businesses into the area. It's more of a thriving community, if you will, but it's bringing obviously tax revenue, residents, and of course jobs into the area. And there's like not a whole lot of communities out there that would not want something like that into their area.
Yeah, for sure. No, that sounds really neat. And just as you're describing it, obviously with the combination of having some office space, some small retail, is this how many levels is this? Is this maybe the storefront retail is at the bottom, then you got some office on the second floor, and then residents up from there, or what does the project look like from that standpoint?
Yeah, so there's 5 total buildings. These 4 ones that are on the perimeter are 3-story. Then there's one main larger building in the center that is 4-story, and that whole entire first floor of that main building is office. And yeah, the commercial suites are in the smaller buildings off to the on the end. And yeah, bottom floor and up towards the busy street on the road.
Okay, okay. Yeah, that sounds neat. And and is this something that the city was lacking? Is just some additional downtown housing that made it appealing to them as well?
Yeah, I wouldn't say they were lacking it. I mean, it's definitely a very, thriving part of the city. It's a very,
Mhm.
uh, you know, it's part of the Indianapolis MSA that is growing, thriving, and this particular city is just very development friendly, very pro growth, and they want projects like that to continue being built in their community.
Okay. And then what are some of the advantages of the particular design that you guys have for maybe the residents and some other considerations, amenities, things like that you've thought of to incorporate into this project, for the residents themselves that would make it kind of stand out between that and their other options?
Yeah, great question. And like you mentioned, yeah, there's a lot of other options out there for residents to choose from. So I guess like our stance is a little bit different as a developer. We're not like always like so focused on building the cheapest product out there. Like we have a cost that's going to cost us to build, and like we want to spend that on the project. Like we want it to be the best possible product. Because again, like there's a ton of competition out there. Once you start cutting your cost, or not doing this amenity, or taking this out, pretty soon, like when you cut all these corners, when you cut all these costs, your apartment or your community is just like the one down the street. So it's really not unique at all, and it's not competitive against the other properties in the area. But I mean, yeah, this property is going to have like really like everything except a pool. It's going to have a luxury plaza area out front with outdoor seating, fountains, green space. It'll have a pet spa, rooftop patio area, a work from home area, a few other things. But most of all, it's like right near the downtown area, and it actually backs up to something called the Nickel Plate Trail, which is a very popular, modern, like thriving trail that the city has invested a lot of money into. And our property, backs right up to this very busy, walkable trail. So it's pretty much like an irreplaceable location. And we think like, with that and many other things on the property, it's just going to make it a very, appealing property to a lot of residents.
Yeah, that's neat. It's neat how a lot of towns have that now, where you've got, there used to be a handful. Well, there's probably was more than I was aware of, but it seemed like certain towns are known for their running, hiking trails, that kind of thing. And then
Yeah.
it really seems to be something that a lot of cities are embracing now, and really putting a lot of money into, which is great. So yeah, that sounds good. Tell me a little bit about the space prior to your development of it. Was this just, an empty lot, or did you have to, demolish something in order to put it there? What was the space being utilized for prior to you starting construction?
There were like 3 or 4 blighted houses on this lot, and a lot of space behind these houses. So they were just run down, kind of just like eyesore type properties on this land. So yeah, the city was definitely motivated to kind of see these houses go away and see like a new kind of like thriving community built on it.
Okay. Yeah,
Yeah.
that's neat. And with those being like three different houses, was it all owned by the same person, or how did you go about the land acquisition piece of the puzzle?
Yeah, I mean, just contacting each owner individually, getting these properties under control, or what we call like under contract, and then and going from there. Yeah, it was like kind of like an individual process.
Okay. And how long did that process start, from, were you involved in the beginning part of that, or was that done by maybe another investor, and then you guys, once the parcel was available as a entire unit, that's when you guys went in, or what part of that did you start with?
Yeah, a lot of that sort of like initial land contracts were all done by my co-development partner. So he was involved in those early stages, getting all the land under contract, under control, and then I really came in like once that was under contract and we had a project ready to go.
Okay. All right. And then tell us a little bit about the process, for maybe the listeners who, it seems very complex. Obviously, any kind of development when you're starting from nothing, was the land, already entitled? Did you have to get it entitled for the specifics? Was it zoned properly? And then, I guess tell us a little bit about, what things like that need to happen prior to actually being able to break ground. And then I've got a follow-up question to that, as far as like, when do the investors get involved with actually putting up money in this particular project?
It was definitely a process, and yeah, in this particular situation, there was a rezoning and entitlement to get the project what we call like shovel ready, or basically ready to start building. Yeah, all that kind of happens behind the scenes before we actually even talk to investors. So this is like real money going into these costs and third party companies to do this up front. But it's because like we already had a lot of confidence that the city would, want to see a project done in this area. So that's about a 6-month process getting the land actually ready. And of course, other than that, there's working with the city to get the agreements for the incentives, which is a whole other beast of its own. On top of that, you're working with an architect, you're working with a civil engineer. All these different third parties kind of come together, all to just even just get to the closing table, which is almost took about a year to get all these third parties, all the information ready to get a project, off the ground. But yeah, it's definitely a process. And investors, to answer your question, investors aren't involved in these beginning stages at all. We only get investors involved once we have a project, shovel ready, fully entitled, ready to go, and we're basically just raising capital to get us to the closing table and then start construction.
Okay. And on that, as far as the land itself, are they just remaining in contract up until that point of the actual closing? When you've got everything entitled, you're ready to go, then you simultaneously close on the land, in addition to, I guess the construction loans and stuff like that.
It depends. It depends on the timing in your contract. There may be, time allowed depending on how long it takes to, just allow the land to be under contract and then, yes, close everything at the end at the same time. Or you may have to purchase the land beforehand with an investor or cash of your own. Kind of like running into that situation now on our second project. We'll be actually closing on the land with cash before we actually close on the construction loan and start the project.
Okay. And as far as the architect and the construction drawings and stuff, how much of the plans and those kind of things do they need to see as part of the entitlement process? In other words, are you saying or going to the city as part of the entitlement and saying, "Hey, look, we're looking to put this, and here's kind of what we have in mind," and selling that idea to them? Or do they say, "Oh, this property we're willing because of the size of it, we can fit X number of, multifamily units on here. The zoning would allow X amount," and then you're just working within a rough parameter like that? Or are you actually selling the idea and kind of the concept drawings and everything to the city?
As far as density and how many units would fit on a piece of land and things like that, really just working with our civil engineer and our architect, with how big the land is, how large the building is, what could fit there. Parking is always a huge constraint. So you might be able to build 150 units, but is there parking that's going to be able to? Is there enough parking for that size? So your parking might actually constrain how many units you can actually build. And then once you take into account the retail, which has different parking requirements, obviously, your property size might actually be lower than what I can actually fit on there, simply because you need a sufficient amount of parking for the space. But yeah, we're just working with our civil engineers, our architects, and getting all that ironed out on our side. And then once we have those, finalized numbers, plans, projections, we're going back to the city and hey, this is what can fit. This is what we want to do. And of course, there's some, back and forth. There's some give and take. They're a real partner in the deal as well, so they have a pretty good say so of what they want to see, or if this building could be 3 stories or keep it 4 stories. There's definitely some back and forth, but what we're doing is just coming together to create a project that makes sense for both sides.
Yeah. That's pretty cool. It's neat to see a kind of blank canvas, if you will, kind of turn into what you guys have been working on so hard. And so you said you're about 55% complete. So is the structure itself on this? I'm just wondering on the parking. With some of the comments that you made on that, do you have parking garage for this type of a project, or
No.
is it? No. Okay. So you've got enough space on that land to be able to actually have uh, just kind of flat parking. Yeah.
Just regular surface parking, correct.
Okay. All right. Interesting. Any other considerations on that particular project that you had to do?
No, I mean, knock on wood, it's going extremely well. It's on schedule, on budget. Learned a ton, but for the most part, it's gone like really smoothly. But I mean,
Okay.
development is really kind of just being able to solve problems along the way. I mean, of course, there's things that come up. Of course, there's problems, but this the word easy, then everybody be doing it.
Yeah, yeah. And so let's maybe go back a little bit to an investor. So an investor decides that they want to invest with you, and like on this particular project, it's once it's shovel ready, they are ready to deploy the capital. You're ready to close on the property and start construction. What should an investor be able to anticipate when it comes to, what type of a hold period is this? How long are you projecting that it's going to take to get it leased up where, revenues are starting to come in? And then what's the exit strategy from an investor standpoint on this one?
I mean, strictly speaking, from our company and our business plan, I can't speak for other developers, but what they can expect seeing from us is that we are very much focused on building these projects, leasing them up, and then selling them immediately or selling them as quickly as possible if the market allows. So yeah, once we get investors involved in the beginning, we close the project, we start construction immediately. After construction, we always send out a update every month, just like letting investors know what's going on. We send a lot of pictures, anything and everything they would need to know. And after that, it's like just keeping investors involved every step of the way. The construction on our projects is going to take around 14 months, which isn't too bad. And then yeah, I mean,
Yeah.
there's going to be like a lease up process, between 4 and 8 months for the lease up, and then we are looking to sell the project as quickly as possible. So I mean, these are like really projects, and again, like strictly speaking for what we do, I mean, these are strictly investments where investors are more concerned with like just multiplying their equity as quickly as possible. Investors are if they're wanting some cash flow along the way or a long term hold, it may not be like the best fit for them. We are focused on building, selling, and really just like multiplying our investors' equity as quickly as possible. I'm just our business plan does not include asset management or holding on to properties. At least just like for what we are doing over here, we don't want to hold on to properties, and there's a couple reasons for that, but we just want to build, sell, and go to the next one.
Yeah, no, it makes sense. So there's no, kind of distribution or anything. It's just kind of you're putting the money in. Here's kind of the time frame of expected, and here's what we're looking to do. And then I'm sure on the out on the back end from the sales standpoint, I mean, there's plenty of investors that are looking for new projects like this that they can, conservatively see returns on, but, not have to anticipate, repairs, that kind of thing, because it's a brand
Yeah,
new project and it's just a matter of just taking it and managing it from there.
that's a good way to put it. And yeah, we do start investor distributions once we hit that stabilization mark. So after it's fully built, fully leased up, stabilized, we do start a quarterly distribution to investors, and they earn that preferred return. They're accruing that preferred return all through construction as well. I should point out that. But yeah, I will point out that we're just focused on selling it as quickly as possible, which we think is just more lucrative for our investors.
Okay. And whatever you're comfortable or allowed to anticipate, but from a multiply standpoint, if somebody was to say invest $100,000 on this particular project, what are the projections? As far as being able to multiply that, what do you expect after that time period, that whole period?
Of course, it varies deal by deal.
Mhm.
Nothing is promised or guaranteed. I would tell you that we look for projects where, with our conservative projections, that we are estimating investors will receive around like a 1.7 or a 2x multiple during our whole period.
Okay, yeah, that's fair. Yeah, that's pretty neat. And okay, let's talk a little bit about this one you guys just announced. Is it going to be in the same town, same area? What and what does that project look like?
Yeah, it's going to be in a city called Kokomo, Indiana, which is about 39 minutes just north of Indianapolis. So this one's going to be 114 units and 3,000 square feet of commercial on the bottom floor. And yeah, I mean, actually, it's going to be, I mean, very similar to our project we have going on now. I'm just a huge fan of, if it's not broke, don't fix it. So, we're using the same architect, the same civil engineer, the same construction company, possibly the same lender. And, we're just using the same third party companies and just doing like a copy paste there in the Kokomo. So if it's not broke, I mean, don't fix it. And I just think, consistency is kind of like the best recipe for success. So
Yeah, no, that makes a lot of sense. And kind of, knowing any issues or things that, adjustments that you had to make along the way on this particular one, you may not see those same issues if you just kind of keep it as similar as you possibly can. So just kind of rinse and repeat and do it again in Kokomo.
exactly. Yeah, but still a very similar style product, very, high quality, A class, quartz countertops, stainless steel appliances, a lot of different amenities. Every unit has a patio or a balcony area. So yeah, very, very nice, kind of high quality community.
Okay. And what's the environment in Indiana like from new construction starts, that kind of thing? Do you feel like there's still plenty of room for future development? Are you anticipating any kind of a slowdown in the number of starts and thinking that you may at some point go outside of the Indiana area?
Yeah, a couple of things. I mean, great question. So first of all, there was a market report that came out actually it's like a month or two ago that showed like the 30 highest like oversupplied markets in the country. There were no markets in Indiana that were on that list. So I don't think Indiana is oversupplied. I still think there's a ton of opportunity for development and still room for development. Um, as far as like construction starts, I mean, yeah, those are significantly low right now. Construction starts are at previous like levels, like back into like 2017, 2016. So construction is happening, but at a very minimal level. Again, like I think that is actually good for us because, like I mentioned, like in the beginning of this podcast, development projects are very, very difficult to get to pencil out unless you're willing to or able to partner with the city in some way. So that's the reason, like, why all these starts at an all-time low is because there's not always these deals like don't always work if there's not municipal incentive to work with. So in the combination with the construction costs, the interest rates, the market uncertainty, I think is driving these construction starts down. But in return, like developers like us that sort of have that competitive advantage to partner with these different cities or towns, we're still actively doing deals because we have that advantage. So I think that's just going to allow more opportunity for us. And with the construction starts decreasing, I think in the coming years, as our projects start to be completed and start leasing up, it's just going to drive rent growth even more. When there's high demand, low supply, I just think that's going to put tremendous pressure on rents in the coming years. So I'm still very optimistic about the future.
Yeah, no, that's great. And so tell me a little bit about that future that, where do you see good in development? Obviously you've got, now already your second project starting and really, just about a year from the initial start,
Right.
not even a year. And so, if you were to look out on the horizon, next 3, 5, maybe 10 years, Justin, what do you see for your company?
Yeah, I mean, great question. Pretty simple explanation. Honestly, I plan to stay doing exactly what I'm doing. So building Class A mixed use projects here in Indiana. I don't plan on going outside of Indiana for a couple different reasons. I mean, Indiana is just a very stable, very consistent state to invest in. Very business friendly, very landlord friendly. So I don't like really have a lot of reasons to go outside of Indiana. On top of that, like I visit my projects weekly, sometimes a couple times a week, and I like being within a few hours driving distance of the projects I do. these are not just projects where you just hire a construction company, like, hey, like, go ahead and get started. I'll check in with you later. I mean, you
Mhm.
have to be like on site, actively managing these projects. Like this is a real investor money, real things happening, and this is not a project you can just go, be hands off or be passive for you. I mean, of course, it's passive for our investors in the deal, but this is a very hands-on, time-consuming process. And unless you had a very large team, I don't think it makes sense to go outside of where you live or without, over like a few hours driving distance from where you live.
Yeah, it makes sense. I mean, there's so much to see along the way as well, and to oversee, and so that makes a lot of sense. Well, good. How about just from and going back to maybe you being an investor with investing with you all. Um, what type of communications can they expect? Obviously, they're going to make their initial investment. There's, as we kind of talked about, not necessarily distributions till the project is stabilized. So there's a little bit of time in between there. Are you doing any kind of a communication, kind of letting the investors know how the project's going, how it's coming along? Do they get to see any kind of progress on that? What does that look like?
Yeah, absolutely. Before we actually even start construction, we do something called a groundbreaking ceremony. So on the actual piece of land, there's the city that comes out. There's like the news stations that come out. Investors are welcome to come to that. Partners are on that land as well for the ceremony. Yeah, after the construction starts, they're involved, every step of the way. So every month we send out a update via email to our investors, and that includes, major milestones, timelines we're hitting, pictures and videos. We take actual like drone photos of the project. So we send out like some really cool pictures and videos every month. They get a scheduled K1, Q1 of every year. And yeah, after the project is complete and there's a ribbon cutting ceremony, the investors are invited that as well if they want to come.
Okay. No, that's great. Okay. And Justin, if you could maybe let the audience know, how they can find out more about you, how they could connect with Goodin Development, and just where can they find you if they want to connect and maybe get in on the next deal?
Yeah, so if you want to learn about our future opportunities, you can go to Goodin Development, and that's Goodin development.com/course. And it's a free 7-day email course that I'll send you one email a day for 7 days. And kind of shows you like A to Z how to get started passively investing, shows you some like, different red flags from sponsors, things to look out for. So that's all like in a free 7-day course. So goodindevelopment.com/course. And you can find me on LinkedIn and Facebook, just Justin Goodin.
Perfect. All right. Well, I've got a couple other questions for you that I ask every guest. If you have just another minute or so,
Yeah, of course.
one would be just any advice you would give somebody who's maybe just starting out in their investment journey.
I would say have a long-term mindset, whether you're getting started actively, passively. I mean, just don't look at anything with a short-term mindset or horizon. Real estate is definitely a long-term play. It takes time to build passive income, build wealth. So it's always, look at things from like a longer-term horizon.
I think that's great advice. And how about a book recommendation? It doesn't necessarily have to be real estate related. It certainly can be, but something you've read that's been impactful.
Yeah. Stay sane in an unsane world. It's an awesome book.
All right. I have
More
not
like
heard of
a
that
personal
one.
development business book, but yeah, awesome read.
Great. Okay. No, that's fantastic. I always ask for the audience, but I ask for myself as well. So I will add that one to my list. I appreciate it. Well, Justin, this has been really cool, man. Really enjoyed taking a dive into the world of development with you. And looks like you guys have just some amazing projects going on. And I can't wait to continue to follow and see what you have going on. So thank you so much.
Thanks for having me on, Keith.
Yeah, appreciate it.
Being that you're still here, I trust you found value in this episode. I personally wish I would have known these guests and strategies when I started my wealth creation journey. Go to wealthflow.capital to subscribe to our newsletter. And as a free gift, we will send you our quarterly market report and the top 10 things to look for in an investment opportunity. Take a minute to give our show a rating and review. Help us reach 1 million professionals by subscribing and sharing this episode with someone you know who could also find value in it.